Hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the Euro, Cable, S&P 500, crude oil and dollar Mexican peso. Now, as you know, markets are quite slow and sideways for this week. Usually this is the case, especially when there is a Thanksgiving week. So today is actually Wednesday, but since Thanksgiving is tomorrow, well, in the US this is treated this day of Wednesday like almost like Friday, because after Thanksgiving tomorrow, plenty of traders will also stay away from the markets even on Friday. So you have to consider that markets could be closed a little bit and that there will be closing markets tomorrow, but then reopen on Friday. So be aware of this situation, because of if there is no real activity, it means that markets could be in a very choppy range. So just be aware and that there may not be any important breakouts just yet. However, looking at the euro and the recent price action, well, we have seen some at the start of the week some US dollar strength, but then US notes were moving sideways, are still sideways actually for the last few sessions, while the stocks US stock market has seen quite nice recovery, especially futures market during Asian hours. We have seen some nice push to the upside on the S&P 500 futures. So in my opinion, this appears to be like a at least short-term intraday risk on sentiment, which could potentially even have a positive impact on the euro. However, there's still a contraction, obviously, of the economic contraction in the eurozone. However, the ECB will most likely, as stated by the ECB members today, they will most likely stay hawkish, because their primary goal is obviously to bring down the inflation, the prices, and they, on the other hand, they realize that this could slow down the economy, but still their first goal is to bring down the inflation. So this is something that could be supportive for the euro. And now if you look here at the price action from the Elliott wave perspective, well, we have seen some nice recovery so far for the last 2 months, but notice that we are now trading at the previous fourth wave resistance levels. There was also a very important resistance, the horizontal one, when you look back at May swing lows, and then was retested here in August, and now we are again in this area. So from a basic technical perspective, we definitely should respect this level, but why I think that we could travel a little bit higher, at least in the short term, is because the recent price action looks quite corrective within this pullback. So if you look closely here, notice that I'm actually observing and tracking free wave recovery from the lows, and we know that each leg which moves in the same direction within this free wave recovery, which in our case is to the upside, this leg and this leg should be made by 5 subwaves. And if you look very closely here at this extended and very strong leg, which so far appears to be much stronger one than the first leg here when market reversed, well, this leg should be made by 5 subwaves. And if you look closely here, that's not the case yet. This is wave 1, you had a wave 2 pullback, wave 3, which so far was much more extended compared to the wave 1, so it makes perfect sense based on personality and guidelines that this is wave 3 that fits to a higher degree impulse. And more importantly, we have seen only a free wave setback. And always when you can define the trend, which obviously is to the upside, at least on this intraday chart, and you have only free wave setback, well, you should be aware that this is just a correction, because when the market is on the rise, each pullbacks within this recovery will have a corrective look, and if you see a free wave drop, well, that's a corrective look, right? Especially when you have this channel, then, or if you want, based on basic technical analysis, this is seen as a bull flag. So far we have seen a very nice bounce. Also notice that we retested this 38.2% and even found a support here at this previous, around this zone, the previous highs. So in my opinion, this appears to be like a very nice zone from where we could see continuation higher into wave 5. Okay, so I'm looking, at least in the short term, I'm expecting more upside. The invalidation level is clearly here, at 101 level, but if we break this level and then potentially even drop back towards parity, well, you know that this will be then again bearish for the euro. So as long as we are consolidating here and staying well above parity, I think that euro has chance for further upside. But as I said, if we'll break parity, then I will turn immediately back to the downside, back to bearish view. Now let's take a look also on pound. Pound is also sideways, and if you firstly just review this ETF, notice that I've been covering this for a while. Notice there were plenty of volumes down there after the pound capitulation that occurred, I think, back in September. But normally when that's the case on pound, well, such as very sharp, strong moves will cause a lot of fear. And when this occurs, well, there's forcing selling into this fear, and this causes a capitulation. But usually that's a very strong, psychological impact. And based on the sentiment, well, we have to be aware that cycles changes from pessimism to optimism, especially when you see these extreme readings. And this pessimism was certainly been at extremes on the pound, especially if we consider that there was an all-time low here. We even passed these 1985 levels for temporary period of time before market reversed higher. More importantly, we bounced back above this this trend line of a wedge pattern. So in my opinion, this is a very nice indication that we could continue much higher, especially because also this previously broken low didn't react as a resistance. So in my opinion, we are headed higher here. And also here, looking at the 4-hour time frame, even if I would be a little bit more careful with predicting a bullish look here for pound, and let's say that I will stick or will turn again bearish on pound, well, even in such case, this recovery from that lows is incomplete. Again, you have this ABC formation then, and again, wave C should be subdivided by 5 subwaves. And if you look closely here at the substructure from 1.1140 level, clearly that's not the case yet. That's wave 1, you had a wave 2, wave 3, wave 4, and expecting a push higher into this wave 5. Okay, so you're now consolidating, meaning more upside here could be seen. So we'll see what will happen later on. There's definitely some resistance levels that we should watch for around 122.30 up to 124. So we'll see if maybe upside will be limited up there. Now let's take a look on stocks. Well, the S&P 500, again on a daily chart here, it's making a very nice recovery, but notice that any real breakouts is not there yet, okay, because there's still trend line in place connected from the highs, and we are now just going to retest it seems. However, I like the fact that we have plenty of room for move to lower levels based on this VIX index, so extreme optimism still is far away, which means that maybe we'll see a breakout even here. However, I also have another wave count because I don't want to force the bullish call if the breakout did not occur yet. So what I'm looking at on this another interpretation is a very complex corrective decline. ABC, you have a wave X and another ABC. So this makes a very nice simple pattern, and you are now moving into this potential timing resistance zone here at around the upper trend line. So if we fail to break higher and instead of that we see a reversal to the downside back below 38.50, I think that we are going to see new lows and then maybe reverse higher later this year or maybe in 2023. However, if you look at the 4-hour chart, again, similar like I've been talking about on euro and pound as well, market is trading higher, at least temporary, and notice that this was only 3-wave drop. We stopped at the former high, new support, so I think that we are headed higher for a wave 5, very nice level, 4,100. That's the next projection here. So if we can touch these levels, of course, till this 5th wave completes the structure, I think that this risk on is in play and could potentially drive US dollar even lower. Now let's take a look on crude oil. Now crude oil, there was a rollover in some news from Saudi, and notice that actually crude oil came to the downside. It retested, even spiked here to these September levels. There was also a rollover contract this week, so traders were selling the old contract and buying the new one, and this is also one of the reasons why we might have seen these significant reversals here. Also looking now at the wave count from based on this latest price action. Well, since we printed a new low here, when looking at the price action from March highs, well, it seems that this drop is not in 3 waves, but rather in 5 waves. And whenever this occurs, well, we should consider that maybe that's a top in place, even if just temporary. So you are now going to see more corrective phase here that could take much longer to unfold than I thought. So what we are looking at is now that we have this leading diagonal for wave A. So that's the first leg of a minimum 3 wave drop. So watch out for more weakness here after this wave B recovery, but still for now wave 5 is underway. Potentially even could retest 70 or $60 per barrel before market will stabilize. But just be aware that this any bounce from the supports here, any significant one, could be maybe just temporary, like a wave B rally before we see further weakness. So I think that this was a very strong impulsive phase up till March, but now we are facing a corrective phase, and this one could be, as you know, a little bit tricky. So we'll be careful here. But what I really like about some of commodity currencies when it comes to crude oil, because as you know, markets are linked. If you see crude oil moving to the upside, you would potentially expect that NOK and CAD, Mexican peso, will also be strong. But what I like is that despite this sharp drop in the last few weeks on crude oil, we are seeing we are seeing Mexican peso still doing quite well. So in my opinion, Mexican peso, which is here in blue, is still going to see more weakness, especially now when other currencies which were much weaker than Mexican peso also slow down here. So in my opinion, I think that Mexican peso has more strength, while the US dollar could potentially see more see more weakness, especially if maybe this will happen at the same time when crude oil is maybe just going to stabilize. But nonetheless, even if when crude oil moved to the downside, we are seeing Mexican peso, which is correlated to crude oil, still very strong. Okay, so if we see any kind of a support on crude oil, I think that Mexican peso will see more weakness. So looking firstly at this chart here, notice that that was a very strong drop, now consolidation. Now we are seeing a breakout, and I believe that we will see a retest of these February 2020 pandemic levels here. Okay, so I will stick with the bearish view here, and looks like this next resumption down may not be far away, because notice that there was that so far is a very nice ongoing bearish impulse. So it's ongoing 5-wave drop. This recent price action, in my opinion, represents just a correction. We are now at this trend line, already reversing lower, so I think that new lows here could be in the cards. I know that sometimes this could be very confusing when looking at my wave levels, but just if you try to focus on clarity here, maybe that's the better illustration here. You have a very sharp reversal, consolidation, breakdown, impulses, another consolidation phase. So obviously I'm looking into a new direction, impulse to the downside, similar legs like we have seen here and here. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.